Hello, and welcome to another day of TA the Degen way. I just wanted to hop on and do an update on the Bitcoin price. And it's been a little while since I've done any updates. I haven't been doing a whole lot of trading, as I perceive us to be in the top eighth of a mega move, and you see these very wild swings, insane volatility. Here's our chart from January 4th, it looks like, and I mean, these aren't just pie in the sky random lines drawn on the screen. These yellow boxes are 25%, which has been the standard deviation on a daily chart for quite some time. And then if you split this up into quarters, you can see these levels are well respected, and since this chart was posted, we did not get swing failure here at 50% of the range. We pushed up to 75% of the range. I mean, you can see how that level was respected dang near to the dollar, and then we pulled back exactly a quarter of the way into the range below, which happens to be our last untested, support resistance flip right there, pretty much to the dollar. And then now we are pushing back up, and I don't think this move to the downside is over. It could be the beginning to the move to the downside. There is a legitimate argument that 69,000 is a forever top. I'm not fully convinced that that's the case. If we break below 32,000, reject, and then come down to the bottom of the range, come back up halfway or so, and reject and break our low, well then, maybe we'll trend sideways for a long time, and 69 is the top. But until then, I am targeting $125,000, $130,000 on Bitcoin, but not currently. Currently, I am looking for this nice pullback that I think is easily expected. You can see looking at our momentum oscillator, we were expecting a top in and around this time, and what did we get at 48,000? Well, this here kind of gives us our levels and our ranges. We can see our main trend lines coming up here. Here's our yearly support resistance flip at about 32K, and also our last main support resistance flip that does have a quarter range fair value gap, just like we had right here. Quarter range fair value gap. Came down, filled that in. Now, where did $48,000, $49,000 come from? If we come back here, this is our trading view page, crypto files 622, and you can see here's the same chart without those things split into ranges, where we were looking at this way back on December 11th. Coming up to, about $50,000 maximum, and trending on down to our main macro trend line, coming down to about this, 30 to anywhere from, we're going to say $30 to $34,000 area. I'm looking more at this 32K area. And hopefully, either trending sideways for a while and reaccumulating, or just continuing to the upside. And this is not the chart I was looking for. Here we go. So I was looking for this here. If we look at when we traded in this range previously, here's our volume profile. Here's our upper range. Here's our lower range. Our yearly support resistance flip at 32K. What is our value area high here? It's at about, $50,000, 48, 49, 50, 48 to 50K value area high, and it's also a measured move. And if you take a fib on a log scale from the bear market low to the bull market high, this is the 61.8 level. I mean, an insane amount of confluence technically there. And if you look here, we got this nice measured move. It's the top of an ascending channel. The momentum oscillator is maxing out, money flow raging, getting way deep up in the green. It takes time to slow that moving train down, which is what we're doing. We're chopping along, and then we should be expecting to come back down to the bottom of our channel. It, maybe worse, maybe trend sideways. That's where this level comes from. And if we're looking at pullback levels, we'll look at this POC when we traded here previously. This is where the most volume was, and it was at about 40K, 38, 4,500. And where did we pull back to? Which is also dead smack in the middle of our ascending channel. Let's just zoom into this chart a bit. Yeah, so we came halfway down our ascending channel. This is from December 8th. It is January 28th. So we're talking about nearly 2 months ago looking at these levels. Now let's look at this channel. Let's think about it logically. Let's divide this again. Just draw another angle here. Where should we expect price to rise here? Come about halfway up. And then come on down. Why do fib retraces work? The 50% retrace work. Why do measured moves work? Why do standard deviations work? Well, it's because these things are incremental movements that are expansions and contractions based off of these ranges. They're just standard deviations being traded over and over and over again, and as the market rotates to the upside based on the liquidity cycle, where those standard deviation is being traded just goes up, and it just follows a nice cycle. So here, we can expect, let's just hop into our regular chart here. We got a nice clean chart of Bitcoin, just a simple bar chart, daily bar chart on Coinbase. So here we're looking at our channel coming up, and what is this price level? It's about $45,000, which was also a monthly pivot long ago. So about 45K comes out about right there. So if we look at our channel, about mid-channel, that's about right. If we just come straight up from right here, the next day or two, could very easily reach mid-channel. Let's see. So let's just grab one of those. Parallel channel. Now, let's just grab a simple trend line tool. Let's match our angle. And we don't need to be exact with this. And you can see, this is a speed line. This is a time versus price equality. If people want to pretend like those things aren't real, that they're lacking brain cells. It's visibly apparent on the screen. Now, how you're going to trade this is extremely subjective. But, the reality that there is a relationship between time and price is, I believe, irrefutable. So, as price pushes up here, where is a likely rejection point? Can we use this to visibly pick a price? Well, not really. We can get an area, when price comes up here and gets up in the area of this red line and rejects. These moves are not small moves. So, there's no need to just hop right on in. I mean, I see a couple things on here. We're looking at this coming up here and possibly coming up and rejecting off of this. If we grab our volume profile tool, which we'll look at in just a second, because I don't like to make price predictions per se, but I do like to predict market behavior. Here we had a nice trend coming up. We had a level that we expected to be a high quality point of macro resistance, and we, for the first time, broke our, put in a lower low. So now we should be looking to put in a higher high, and to put in this lower low, well, we should automatically be targeting these lows and breaking them. And what is the next level below? Well, here is, resistance, now flipped into support. It aligns at the center of our channel. Now we're expecting to come back up and put in a lower high as we traverse this channel. So, I mean, where would we expect this lower high to come out? Well, one, we could get a full-on double top. We could get a liquidity grab above the top. I mean, we could just rock it on up to 125,000 for that matter. I mean, this is forecasting, just looking for probability. I mean, what's your next trade? If I wanted to trade this looking at a daily chart, I wouldn't touch it right here, long or short. I mean, if price comes down to the bottom of this range, here's our lows. Daily low, daily low, daily low, daily low, daily high. This is a support resistance flip. I'd be looking for price to pull back here and then hopefully pump one more time to the upside to these daily highs, to the top of this range. And if we're looking for levels, well, how do we find high quality levels? Well, we have volume levels. Instead of taking the whole profile, let's say that price lost these lows and broke down here. It is now came back up into this range, and we're looking for it to retest the lows of this range and come on up. So what I want to know is when price traded in this range previously, between this low and this high, or even this high, what levels was the most volume traded at? Let's see. What do we have this set at? At 100. It should be able to pull that up. Let's see why it's not. Give that just a second. There we go. So when price traded in this range previously, what levels were of high importance? Well, here's the value area high, right there, traversing across those daily lows, or daily highs, I mean, and if we consider this little micro range, it's a support resistance flip. Broke above, flipped the value area high into support, rocketed up to the high. So there's a level. Let's look at this POC. There's a level. Let's look at the value area low. And there's a level. So now if I wanted to trade this currently, now these are levels to the upside. Where can we expect price to rise to? Well, I'm right off the bat looking at this channel for a time-based resistance. Here's a high quality level, matches up with a bunch of daily closes, obvious resistance, value area high, and it's aligning with our horizontal time-based resistance speed line. Now if we consider this entire price range for our volume, I don't understand why it doesn't want to pull that up. Let's see what the error message is. There we go, just not enough ticks per row. So here we got a value area low. Our value area highs coming out at about the same. And then we have a POC right there. So if I wanted to trade this currently, I would do nothing. I would not short this. I would not long this. I would wait for price to come back down to this value area low, or at least close. I mean, let's get creative. Why not split the channel again? Yeah, it sounds funny. Probably work. You know, or even divide it one more time. What's half of that? Probably be about right about there. So let's wait for price to come back down here, take a long trade up to here for a lower high, where we're looking for a short trade to come all the way down to this macro uptrend line. Because when we're talking about the macro, we have broken market structure, we've broken this trend, we're in an ascending channel that in all seriousness, ascending channels have more probability of breaking to the downside, by the way. Just keep that in mind. We've retraced 61.8% of this big mega downtrend. If you were trading on a 5-minute chart, that's the short entry. Now we've broken market structure, coming up for a lower high. We've already missed most of the move to the upside, where, I mean, if this just continues, well, then you're just looking for a short trade. Well, where? Now let's search for some further confluence. Let's grab our fib tool, and let's look for, you know, we want to see how much percent from this low to this high. All I have on here is what I feel matters, which is the 50% to the 61.8 mark, golden pocket, which, I mean, we have some alignment. The stars align, so here's, now we can start talking about some time, even, like what days and at what price levels should we be looking for this reversal. Well, here, our speed line matches with our value area high and dead smack in the middle of the golden pocket. There's a lot of confluence right there. What if we come all the way up to the 618 and we break above that value area high? Well, now we're looking right there. If we want to get creative, let's add some extra values to our fib tool here. We'll add on the 786. Now we're looking out here. Like, let's say we come down and put in a left shoulder, come on up, play around, boom, boom, mega move to the downside. So, this gives us some context as to what we can look for. We've got, let's see. To me, this is the most likely scenario. Also, by the way, just pushing right on up to this. A little micro pullback. Provide the illusion of some giant reverse head and shoulders. Push up into the golden pocket, hit the speed line, value area high, reject. If we look at our oscillator, you can see our daily oscillator. We would be expecting a bottom sometime. Let's just follow this oscillation. Here. So we're expecting this to come up like this. Now let's look at the price action. Let's see here. Something like this. So I mean, what I'm looking for is for price to come up here, reject, measured move to the downside, which is also about 50% of this channel. Come on up. And chop our way around. Push on to the upside. I would find very ideal. And it looks pretty on the chart. Look at that level. So I mean, that's where I'm at on Bitcoin. You know, I mean, that's where I'm at on the whole market. And I mean, this here's a lot of time. We talked about before our next run not being until the end of June. Our next major move to the upside, or you know, our bull market beginning. You know, that a lot of times happens at the season change, June 20th. You know, I think June 20th was the ETH bottom. There's June 20th right there. Major bottom. Huge run. So, I mean, that's where I'm at. You know, I mean, that means that we have, 6 months of down/sideways action on major cap coin. So I wonder what's going to happen to something like a CFX, which is why if we come back to our CryptoFile 622 ideas page, you can see I've posted a setup for what I believe to be a massive short move, and then we're going to wrap this up. If you like this kind of content, like, join, share, subscribe, or come into our Discord. And I mean, I trade primarily according to the principles that I find that govern the market, which is things move in equal proportion, and it's the same players, aside from, you know, newcomers is what is kind of driving the liquidity cycle. Aside from profit taking and shorting, I find that the market moves in controlled increments and ranges. Learn these things from books from W.D. Gann. There's time-based resistance, time versus price. There's a lot of equalities there as to how fast it's moving, like the trajectory of a baseball, and gauging that momentum based on its rate of change in value, taking the percentage gain or loss over time to measure momentum. I mean, that's why trend lines work, channels work, speed lines work, and yes, fans work if you know how to use them. It's not an exact science. Well, it is an exact science, but I mean, it's not. The expectations that people have from them is not quite what they're designed for. But here we're looking at CFX, and here's a good example of some Gann analysis. You know, here I've taken this 1200% pump here and split it into 1/8 increments. And if we look at it, we can see that the Genesis impulse here, back here, was exactly 1/8 of this right here. So I mean, you could think of this like an octave scale. You know, price has moved up 8 times in the same increment. And what happened? We came up, we pulled back exactly 50% of the way, we pushed up exactly 50% of the way back up, and now we are in a position where we macro top in the larger cap coins or larger cap assets. So if we're looking at a 6-month lull, potentially, look at our oscillator. Here we're pushing up into a top where we expected a top right here, and then you can see boom, we got this wave to the downside. Now if we press the play button, you can see prices come back up again. Look at this trend line coming up. We broke below it, we've come up and retested it, and instantly have come back down into the range, and currently on a small time frame we're pushing up and retesting this 22.50, 23 cent area. Now if we think about this 1200% pump, if we're going to have a 6-month period, some kind of a lull here, I mean, that provides a lot of time for this to retrace. I mean, how much of this is based on hype, and how much of this is based on people who truly want a long-term hold and invest in CFX? I mean, that'll be the question. This pump 1200% off a bear market bottom. Definitely lots of interest, lots of hype. It retraced 50% of the way, so the idea that we can't come down massively, I mean, we're talking about 50 cents to 25 cents, lost half its value. And it will likely lose half of its value again. And, there's a high potential that we end up back down in this 5-6 cents area for a 75% retrace, or if we look at even a 5/8 retrace. Here we still also, like Bitcoin, have a nice, large fair value gap left behind to fill, which brings us down awfully close to this 5/8 mark, or if we consider exactly halfway in between, aligning with these highs. So, I mean, when it comes to CFX, I mean, that's what I'm looking at. There's some other things that I use to come up with this little area here of being high interest. So I am currently short on this, as if we come to our regular price chart, we'll wrap this up here with CFX. Let's hop on the Binance one, and we'll clear this page out. There we go. Pull this up here. Price has come up to this high once again. It just barely grabbed the liquidity above that high. Let's see, the high on this bar is 23.83. Here we're at 23.61. So it came up by a little bit more. And then now we've pulled back. Well, how far have we pulled back? A little bit less than 50%. Probably the 382, or about a third. And if we grab our volume profile tool here, it's likely our value area high. Oh no, it's not. Well, here we gotta change it. See, now this here is not Bitcoin. Bitcoin's at tens of thousands of dollars. This is at 0.4 zeros. So I mean, we can't use a row size of 200. We have to use a row size much smaller, like 10. So yeah, we haven't pulled back to our value area high. But I am expecting to come up and put in a lower high, maybe at this daily close, or maybe even at our current price right here. Now, let's just take this pump. We're on a daily. Let's drop down to an hourly. And let's look at this massive mega move to the upside, which is another thing that gives me a strong inclination of a major top, as we're seeing these huge moves up, huge moves down. I mean, that's a signature move of distribution. So I mean, we came up here and kind of flatlined, got some nice curvature, popped up, grabbed that liquidity, instantly popped back below, and are now coming back up to retest. And if we look at the low of this micro range up here, we're hitting it right now. If we pull up our oscillator, it's not looking too hot. Money flow coming down sharp. And if we follow our waves here, it's not really round, it's more triangular. You know, we'd be looking for a top right here, which is what we got. And now we've got our first trigger wave to the downside. And that's on the hourly. And we came down, we lost this entire micro range. And that was support in the micro range. Now likely going to be flipped into resistance. So I mean, when we're looking at this at a minimum from a trading standpoint, I mean, this is the lowest risk short entry anyways, where you have the clearest confluence, where I mean, if you're looking at a stop loss above the high, you are looking at about 8%. You know, we've lost it, come back up for the retest, and now we're looking for a rejection signal here that I've already shorted this twice. And you know, here's our high bar. We're on it right now on our bar. I mean, look at the size of this bar. Look at the size of this bar. Look at the size of this bar right here. It's getting a little smaller. Then here we got an inside bar, major indecision, likely liquidity grab, and we'll probably pull back under and then come on down. Now, if you think about where we can come down to, let's just first, here's our value area high. We're clear above it. Let's pull our measured move. Brings us down to inside our value area, real close to that POC. What I would like to see is a drop all the way down to this POC, or even just slightly higher, retest this value area high, come back on down to this value area low, and not make it to the POC, or maybe up there and then reject. But if we follow this oscillation right here, you know, we're expecting a micro bottom somewhere right in around here. That would probably likely be down, hopefully down here, and you know, come up for our swing lower high. And when it comes to this super low price target of 4 or 5 cents, let's pop back out to that daily. Let's look at a couple things here. First, let's grab our fib retrace here. Let's open that up, put that on a log scale. We're going down, so we want the numbers coming down. So I mean, just looking at it from a Fibonacci standpoint, you know, 61.8, matching up with those highs, awfully nice, filling in that fair value gap. So even if you just thought about this as a short to there, that's a pretty healthy move. We're talking 23 cents down to 7 cents. Long way down. 67% drop. You know, I'm talking about losing 50% of its value. That's a 67% drop. Let's look at a measured move. Measured move is bringing us down into the territory that I'm talking about, which is 75% to the 786 here. I like to view the market in eighths. Why do I view the market in eighths? Well, I view the market in eighths because oftentimes I find the initial impulse, the initial range, to be 1/8. That's a standard deviation. You know, I mean, I couldn't make that up if I tried. It just is what it is. You know, look at it right there. Look at it right there. Look at the range you're in right there. I mean, measured move. Come right. Why? Because we pumped this far. We retraced 50%. We retraced 50% of this right here. I mean, if we pull this up here, we're just looking at this swing. We came back up 50% of the way. And it's not to the penny, but I mean, it's rejecting from that area. So now we're looking at, you know, I mean, potential targets to the downside. You know, what level should we be looking at? You know, well, here's our measured move. It brings us down for a 75% retrace. Here's our, if we flip this over, our 5/8 mark, which is, you know, equivalent to the 61.8, 62.5%. You know, this matches with filling in our fair value gap. If we thought about just this major pump here, if none of this price action was here, we said, you know, it's likely that we will pull back into the golden pocket 50% to 61.8% of the way. It's a 5/8 retrace. You know, and when you start to rally and gain support and range above the 5/8 mark, or maybe above the, you know, the 6/8 mark, 75%, you know, you don't make it all the way there. Maybe you dip right below it, come back up, and you start to range you know, at these key levels. I mean, well, then it tells you that you're likely to get a reversal. Like right here, price pulled back 50% of the way. It started to rally right above 50%. Got support, and boom, rocketed on off. Same thing. It came up 50% of the way, which is 25% of the range. You know, it's been rejecting off of it repeatedly. You know, likely come on down. So that's where I am at on CFX. If we look at some time-based resistance, let's see. Let's go from our low right there. And let's go to our high right there. Now, when it comes to any kind of Gann trading, and Gann said that the greatest thing that he ever discovered was percentages. That's what we're talking about right here. Retracing a percentage of the move, or the percentages, expanding this range by percentages. You know, it's growing exponentially. So now, that was one of the primary things that he used to come up with levels, but then he also used angles to show the relationship between time and price. We're talking about momentum. How long does it take for a trend to exhaust? You know, and how can we gauge that? Well, here is the low, here is the high. This is a defined amount of time. This is a defined rate of increase. I mean, the move is over, it's finished, it's done. It went up this far in this amount of time. This is a 1-to-1 relationship. You know, so if you grabbed your Gann fan and you slap this on here, now that the move is done, this is your 1-to-1. Here is a 2-to-1, a 3-to-1, a 4-to-1, and a 5-to-1. Why does that mean anything or make any sense or have anything to do with anything? Well, it's very, very simple. This is the range. This is a 1-to-1 relationship. How do we find a 2-to-1 relationship? Well, if we break this up into eighths here, like this is how a real Gann fan is drawn. This is the way that Gann would have drawn a fan. He would have taken this range, he would have, you know, visualized or scribed a line at the high, right there, another one at the low, right there. Let's split this up. Here's the 50% mark, the 25% mark, the 75% mark. Let's grab this trend line. Let's bring it right across the 50% mark there. This is, right here is a 1-to-1 relationship of how long it took to get from here to here. This is a 2-to-1 right here. You know, or 1 to 2, vice versa. I don't know. Who cares? It works. Here's the next one. Let's go to quarters. That's why if you look at the old Gann charts, the images, you always see these 3 little lines. This is the 1-to-1 relationship. It's either the 1-to-1 relationship that he expected, or after one already exists, well, then it becomes self-explanatory. Here's the 2-to-1, you know, and there's the 3-to-1. We can actually draw all of these in and come up with all kinds of time-based levels. Why? Because this is using market geometry. If there is a common relationship between time and price, and there is, it's a rate of change, it's momentum, it's measurable, well then the use of a circle is a geometric shape that has one centralized location that it is measuring from. When we split this up like this, what we're doing is we are looking at degrees of a circle. So this is showing us the momentum of this change right here. As this exhausts, now I mean, these are not just magical lines on the screen. You know, when people draw like spider lines, that is the reason that works, and they find these pivot points is because there is a mathematical relationship between time and price, and when they are square, the trend changes. Like here, you know, price came up, and I mean, if we zoom this out far enough on a log scale is showing us the change in percentage of value. Here it went up in value really fast. It went up in value really fast, but it's getting slower as time goes on. Here it's slower. The moves are bigger. I mean, look at this wave. It's tiny, small, you know, boom, 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 getting smaller, pewtering out. You can, and look at this rounded shape here, this curve. So you hear people talk about curvature all the time. This is the rate of decay of the trend. It's losing momentum. See it right here. You know, this is why your oscillator works, you know, because these are moving averages. The average price is not gaining in percentage of value as fast as it was previously. And the more time goes on, the average is not climbing as steeply as it was previously. It's decreasing as time goes on. And when that gets flat, when it flatlines, so a log scale works very well. Time and price are square. It went up this far and went over this far. I mean, it's just that simple, you know. And using this, now we can draw all kinds of speed-based resistance. And to further show that relationship, let's just grab a circle. Here's our low, right here, where we're measuring off of. Let's do something else. Let's grab a circle, and then we're going to wrap this up. Here's our circle. Let's draw it up to 1/8, and then let's adjust the zoom of our chart to match this first top here. Okay, there we go. So now we have a time and price relationship with our trend. Now let's raise it up here. What do we have here? Another one. Let's raise it up here. Another high. Raise it up more, the 50% mark. not much there. Here we got pretty much almost to the high. What we're looking for here, and I mean, if we're looking at a much bigger scale, you're going to see a much stronger relationship between time and price at these swings. So like, let's adjust it so getting the aspect ratio, I mean, doesn't really matter. There is a qualities, an expansion of the standard deviation. Whatever the standard deviation is, it's just expanding up and down this chart. Let's line this up right with the high. Alright. Now let's move it up. Right at that drop. Right at that drop, you know, right at the end of the trend. Right there, right at that exact bottom. I mean, this is not telling you what to do when you're trading. This is just showing you these equalities so that while you are trading, when you look at that bottom, you can look for these relationships to make decisions and then trade accordingly based off of what you actually see. You know, and then now we're getting into this super low volatility. You know, the trend is over. Well, why? We've reached the top. Well, we've got one more rung. You know, here, trend change, but it only produced this tiny little thing. We're at the end of the chain here. Here's the top. Where time and price were square. Now, when did the trend change to the downside? Now, I did not make that up in my sleep. You know, price went up this far, went over this far, and the trend changed. I mean, it is just, you know, that simple. Now, how you use that for forecasting is, you know, is highly discretionary, but the functionality of it is not. And the way that this works in real time is just not debatable. Like, this is the way that these things work. Now, how price is going to interact here, I mean, I just can't tell you. I don't know. I mean, nobody can predict the price. You can show these relationships, you know they exist, so now from here we can, you know, try and draw some of the same conclusions. So what is the last support of this pump? You know, the last speed line for this trend right here to be viable. It's retraced 50%. I mean, the longer this drags on, the more chance of, without pumping, the more chance it has of dumping, you know, as it's traversing across here. You know, and now let's look at each of these junctions. Let's get rid of our eighths. You know, here is your low. Here is your trend change. Here is your resistance. Here it's your resistance. Resistance. And here it's our last support. And I bet we drop down below this puppy. She becomes resistance as we move on down to our projected target of 5-6 cents. You know, that's just where I'm at on it. Well, that's what I got for today. It's been a while. If you like this kind of TA, if you want to learn how to do this stuff in real time, I mean, we go down to a 1-minute chart. And do the same thing over and over and over again. Practice that kind of stuff, because trading is extremely based off of intuition, experience of, you know, how price is interacting. It's okay to be wrong. I mean, there's a billion things that, you know, that come into this. You know, it's like even here, you know, price came down, came all the way. This is this high that we're looking at. We came up and grabbed that liquidity and rocketed on down, you know. Here you can see where time and price were square. I mean, it's pretty obvious. I mean, look at it losing momentum. Flat lines. Drops. You know, did we rally again and take this liquidity? Yeah, with some super chop. Boom. Came back down. Retested this level. Put in a lower low. We're back up to retest it again. And I tell you what, if this rejects, I mean, that is pretty much a given. And then now we can kind of follow the same idea to the downside. When time and price are square, the trend will change. You know, we're working our way to the downside. We also got some curvature right here. You know, so maybe we pause here and we just range for a while first and then come on down. I don't know. Nobody knows. But you make judgment calls based off of your understanding of basic market principles and how to measure them. And then use your intuition and trade what you see. But if you like this, head on over to the Discord and that link. But until then, trade well.